This is Matthew Cratter from Trader University, and today I want to talk a little bit more about how unstoppable Bitcoin is. We've been hearing for years about how China has the power to destroy Bitcoin. This is an article published back on October 8th of 2018, back when Bitcoin was trading for approximately 6,600. Today, it's close to 36,000. And it's important to have this context because what we have just witnessed is, as far as I can tell and as far as I can remember, the largest attack on the Bitcoin network in history. It's hard to overemphasize this. If we take a look at the hash rate has just completely fallen off a cliff, the 7-day average, and especially the raw values. And what's been the result of this? China has essentially banned Bitcoin. They've shut down all the miners, forced them to leave the country, forced them to dismantle their infrastructure. And what's been the net result? Well, the block time of the Bitcoin blocks has been a little bit slower. It's been about 13 minutes on average over the past 2 weeks. And we're in line for a huge difficulty adjustment. I believe this is the largest in history, minus 25 or minus 26%. This will make it easier to mine Bitcoin and make those blocks a little faster so they hit the 10-minute mark. So what's happened in the process? Well, we've had a drawdown. It's been very painful, and I don't want to minimize it, but it's been a 50% drawdown when one of the largest and most powerful countries in the world attacks Bitcoin. And in retrospect, it looks like the sell-off in Bitcoin was some very smart money anticipating what was happening in China. Elon Musk's negative comments about Bitcoin may indicate that he knew this was coming as well. So a lot of this sell-off is really not, I think, the whole sideshow with Elon Musk buying Bitcoin and then pumping Dogecoin and bad-mouthing Bitcoin's energy usage. In retrospect, with the perspective of the past couple weeks, we can see that this was really not what was going on. What was actually going on was smart money anticipating China's crackdown. And what we may be seeing as well, and this is a little bit controversial in terms of what's happening at the blockchain level, but there is the hypothesis, of course, that a lot of Chinese Bitcoin miners need to liquidate their Bitcoin to pay for moving their equipment and all the unexpected costs. So that may have contributed to the sell-off as well. That being said, major country shuts down Bitcoin, and what happens? Block times get a little bit smaller. The Bitcoin falls 50%. And of course, the really ironic thing is everything else falls with it because Bitcoin is really the only game in town. Everything else is just a high beta play on that. Bull markets for crypto, for altcoins, they always start with the Bitcoin halving because Bitcoin is the only truly decentralized cryptocurrency. So what I'd say is that this 51% drawdown that we've just had, painful as it is, this is really a dip for ants. You would expect something like this if you had to anticipate it, that the price of Bitcoin would have gone down 80 or 90%. That being said, the Bitcoin miners are not the most essential part of the network. They do provide security for the blockchain. They're very important, but they do not control the network. The network and consensus rules are enforced by the full nodes, which are decentralized and are everywhere. And this is really, as we've said, this is very good news for Bitcoin, that the miners are becoming less centralized and they're not concentrated as much as they were in a hostile communist country like China. So this is Bitcoin. This is how robust it is. This is how strong it is. When this bearish article on China was published, Bitcoin was in the 6,000s. As we said, now it's about 6 times that price. If we contrast this with Ethereum, all you need to take it down and cripple it is you need 2 phone calls. You call Infura and tell them to shut it down, and you call Jeff Bezos in Amazon Web Services and tell them to shut it down. And you've essentially crippled the whole Ethereum network. Even Infura going down accidentally completely cripples everything. This shows you how much less decentralized Ethereum is. If you're finding this video helpful so far, please hit that subscribe and like button. Share this video with a few friends, maybe someone who's into Ethereum, and tell them this as well. Let's imagine that China, rather than just turning off the Bitcoin miners, forcing them to unplug, had actually confiscated all the mining equipment. It doesn't look like any mining equipment was confiscated. Maybe a little bit was. Most of it's just moving outside the country. But imagine China instead had confiscated all the mining equipment. So what would the Bitcoin network's response be? Well, it'd simply be to set up new mining rigs outside the country, even if they weren't able to move those old mining rigs out of the country. So that's what proof of work, that's how robust proof of work is. Let's imagine that Bitcoin was a proof of stake currency like Ethereum is moving to be. What happens under proof of stake when you have a nation state level attack, as we just had with Bitcoin? Well, the country, in a worst case scenario, could come in and shut down all the custodians who hold large amounts of ETH. Binance is currently being kicked out of the UK. If we had this happening in a more hostile country where they could actually grab the servers and take control of the ETH, especially crypto exchanges, most people will never stake their own coins. They'll give it to Coinbase or Kraken or one of these big exchanges or Binance to stake for them. And so what will happen, and what happens under proof of stake systems, they become more and more centralized over time. The exchanges become very powerful, and they become subject to state level attacks. So if under proof of stake, if a country like China was able to grab all the custodians and shut things down, you would basically have removed a huge validator, which is what the miners are called under proof of stake. You would have just removed a huge validator from the system. And it's hard to really know. There's a scenario as well where this large validator that's been seized, this huge pool of ETH that's been staked, could be used to do bad things on the network. And there's really no way to solve for this, unlike proof of work, where it's truly decentralized, except in a proof of stake currency, you could do a hard fork. But the bigger it becomes, the more centralized it becomes. And when you get very, very large values, and for example, you have whole countries where there are just a few huge validators that validate blocks around the world, you can run into a lot of trouble. And a hard fork, even a hard fork, might be difficult to pull off. By contrast, here's another example of proof of work. Here's a Bitcoin miner. Someone set this up on a stream, which I actually talked about in a previous video, the idea of using Bitcoin mining on a piece of rural land to help pay for the mortgage. Someone's actually done this where they used a small stream. They used the power from the stream to run some Bitcoin mining rigs. So this is the difference. This is the sort of innovation that proof of work leads to. Proof of stake never leads to any innovation. It just leads to rich people sitting on their hands collecting more ETH and getting richer. Proof of work encourages the use of low-cost energy, renewable energy, and innovation, both at the level of mining equipment, mining rigs, and also seeking out stranded energy sources. We can see that this is very environmentally friendly, what's been set up here. Meanwhile, the wall of money is still headed toward Bitcoin. The recent drawdown, I think, won't affect anything. Institutions are like the QE2, like very large cruise ships. Once they start turning, they have to plan to turn 10 miles ahead of time and an hour ahead of time. They're very slow to move. And once they move, they're not going to stop just because Bitcoin has gone down. In fact, these are very smart people, and they're smart to know that they want to buy Bitcoin at cheaper prices. And they also want to offer financial services around Bitcoin because this can be very profitable. So the largest interdealer broker, ICAP, is now launching Bitcoin trading services for institutions. Meanwhile, we're one day closer to a Bitcoin ETF. Cathie Wood's ARK has just submitted an ETF request with the SEC. The SEC has been turning down these requests, but at a certain point, they're going to need to give in, and they can't just keep turning this down because there's now enough liquidity in Bitcoin derivatives and on the exchanges in spot Bitcoin to support an ETF. So one of these ETFs is going to make it through. I don't know if it's going to be Cathie Wood's or one of the other ones. When that happens, it creates a very easy way for retail investors to invest in the same way we have the SPY and the QQQs for stocks, and in the same way that we saw huge inflows into gold from the retail investor, or I should say paper gold, when the gold ETF GLD came out in the I believe it was the mid 2000s. So these walls of money are still intact. They are still coming, and I'm still very bullish. I'm still expecting Bitcoin to hit $200,000 per Bitcoin by the end of the year. Meanwhile, Bitcoin's brand just continues to spread around the world. Bitcoin ATMs being installed all around El Salvador. These are not XRP ATMs. These are not Dogecoin ATMs. Bitcoin is actually being used in so many countries, particularly Central America and South America, Africa, and especially in countries where the local currencies are not stable. Meanwhile, it looks like there may be some Bitcoin, some bonds issued by El Salvador, by the government, and issued actually on the Bitcoin blockchain. And these bonds, the funds that would be raised, would be used to tap into geothermal energy. So what you're basically doing here is you're issuing bonds to set up volcano miners for Bitcoin, and you're issuing those bonds actually on the blockchain. I'm not sure exactly how this would work. It hasn't been done, as far as I know, on a side chain or on the Bitcoin base layer. But we'll see what happens. We're really living in exciting times when we're even talking about these sort of, we can call them volcano bonds. Meanwhile, Ricardo Salinas in Mexico holds 10% of his portfolio in Bitcoin. If you've been selling during the recent drawdown, these are the kinds of people that you're selling to. You're selling to Michael Saylor, you're selling to Ricardo Salinas, and other people like him who really understand Bitcoin and realize that everything that's coming out of China is good news for Bitcoin. And it really does show Bitcoin's robustness. No one can stop Bitcoin. China cannot stop Bitcoin. You can turn off the internet to your citizens, as North Korea has done. You can turn off Bitcoin to your citizens, but you just give other countries a competitive advantage. And you can still use Bitcoin in China. You just set up, I imagine, a Tor browser, and you can do whatever you want. You can still pass Bitcoin back and forth. The former New York Stock Exchange president, Thomas Farley, said that Bitcoin can easily become a $10 trillion market. That's roughly the market cap of gold right now, and it would mean more than 10x upside here on Bitcoin. So we're seeing all these very smart people in finance still confirming the hypothesis. Meanwhile, Bitcoin is now listed as a currency on the CashApp by Square. We can see we have the US dollar down here, and we also have Bitcoin getting its own tab. This is why Bitcoin's going to win. There's no XRP tab here. There's no ETH tab. There's no Dogecoin tab. Bitcoin has the best worldwide brand. And the more you see, every time a new tab gets set up like this, just means more people are going to click and buy Bitcoin. And this is how Bitcoin further benefits from network effects. Meanwhile, be careful out there. There have been scammers sending out ledger wallets, fake ledger wallets, where the hardware has been modified. And so when you put your private key in, your seed recovery phrase, your Bitcoin gets stolen. If someone mails you a Bitcoin wallet, a hardware wallet, and you haven't ordered it, never, ever use it. Never plug it into anything. And certainly don't enter your seed recovery phrase in it. Ledger has a very bad history in terms of they were hacked, and 270,000 customer addresses were stolen. And so now scammers are mailing these fake hardware wallets. To store your Bitcoin on a hardware wallet, you should order your hardware wallet directly from the manufacturer, not from a third-party seller on Amazon. And I like the Trezor more than the Ledger. The Ledger, the software and the firmware are all closed source. For Trezor, they're all open source. And this makes it mean that there are a lot more eyeballs watching the code and making sure there are not backdoors or other hacks that can be done. But certainly if you get a hardware wallet in the mail, if you get one at a convention, if someone in a hotel lobby has a bowl full of them, do not take them and use them. This is a really easy way to fish for people's Bitcoin or other crypto seed recovery phrases. Finally, for all the people who think Bitcoin's in a bubble, we've talked about this many times, but I thought this was funny. I just came across this. This is about the Bitcoin bubble 10 years ago. And if you look up the price when this was posted on Reddit, Bitcoin was trading for $1. Bitcoin's always been in a bubble. It's always been overpriced. This is what a monetary good looks like. This is what a commodity or an asset looks like when it's in the process of being monetized. It trades at a premium to where you would expect it to be. And so the Bitcoin bubble people have been with us since the beginning. And if you've listened to them, and if you continue to listen to them, you're really going to miss out on the biggest investment since the internet. If you found this video helpful, be sure to hit that subscribe and like button. Hit the notification bell if you want to be notified when I publish my next video. And let me know your questions and comments and future video ideas in the comment section below. Thanks a lot for watching, and I'll see you in the next video.